Good morning, everybody. It's Wednesday, March 12th, 5:24 a.m. Central Time. Grain markets are lower this morning. May corn futures down 6 at 464 and a quarter. May soybeans down 7 and a quarter at 1004. May Chicago wheat down 5 at 551 and three quarters. May Kansas City wheat down 4 and three quarters at 567 and a quarter. May spring wheat is down 5 cents at 592 and a quarter. Mackenzie, I feel as if we need to acknowledge and apologize for all of the technology issues that we've had as of late.
Yep, we have had a string of them.
I'd like to run when it rains, it pours. Everything that we use, like to give you an idea as to what we do as content creators. We have 5 or 6 different systems, whether it's email, video, charting. They all went wrong the last 4 or 5 days. On Thursday and Friday, our graphics and our videos stopped working for whatever reason. Also on Thursday and Friday, we buy the Thomson Reuters newswire service. It's called Icon, and we were told we have to transition to this new one because they're getting rid of Icon, and the new one sucks. And I was flustered with that. It doesn't do half of the things that the old one does. And then Saturday, this is my fault. I had what I would call a boomer moment with regard to my email. So I don't go on vacation, and therefore I don't think I've ever used an out of office message. So I turned on my out of office replies, like the auto replies. And when I turned it on, it sent an out of office reply to like every person that's ever sent me an email ever. So people got Mackenzie got 100 emails from me with an out of office reply on Saturday. So I had that go wrong. And then Monday morning, Mackenzie emails me at 5 or texts me at 5 in the morning. Joe, our email system's down. We can't send out the email. Of course, like the one day that I take off ever, So it was a lot of fun.
Lots of things happening.
I'm hoping it's all behind us. I had one additional problem. My arms are sore from reeling in these damn fish. I was on a fishing trip over the weekend and into Monday and Tuesday. Me and my dad and my son went down to Alabama. If you guys were wondering where I wasn't just like leaving you hanging here. I was out having some fun. I hope to do it some more. Let's get into our first story.
Alrighty, so USDA left its U.S. corn and soybean balance sheets unchanged on Tuesday. Traders had expected a reduction in corn ending stocks due to strong U.S. export demand. Soybean stocks remained unchanged, while analysts had anticipated a slight reduction. The USDA likely held off on making any changes as they wait to see what tariffs the U.S. imposes and how our trading partners react. The U.S. wheat balance sheet saw a minor adjustment, with stock levels rising more than expected. The markets moved lower following the report, driven by lower than expected demand estimates for corn and higher wheat inventories. Soybean prices were pressured by expectations of a record large South American crop flooding the global market.
USDA did acknowledge the tariff situation on the front page of the WSD report. They said this: U.S. tariffs on Canada and Mexico have been suspended until April 2nd for all products covered under USMCA, which include most agricultural products in the WSD. Reciprocal tariffs are also scheduled to begin on April 2nd. However, until these are in effect, WSD does not incorporate them into commodity forecasts. They went on to say this: despite U.S. tariffs being suspended, Canada's retaliatory tariffs remain in place. These are accounted for in WSD estimates and are assumed to continue. U.S. tariffs on China and China's retaliatory tariffs on the U.S. are assumed to remain in place. They say that, yet the soybean export forecast was left unchanged. The corn export forecast was left unchanged. I don't know like where they were going with that. In any case, let's look at the ending stocks. So unchanged for corn, United States projection, unchanged for soybeans. I think USDA should have come up with the corn export forecast. We've had a very strong pace of sales. I know Ryan talked yesterday about the strong pace of shipments, which has continued, yet USDA refuses to acknowledge a stronger export program. It's getting awfully late to say that this is a front-loaded program. It's mid-March, and we're still selling a lot of corn. We're still shipping a lot of corn. Brazil doesn't really have anything to offer on the export market right now. Mexico's appetite for corn still seems to be pretty strong. So I don't know. I may be wrong, but I don't have a reason to believe that the program's front loaded. You look at wheat ending stocks and the projection came up. USDA reduced its projection for U.S. wheat exports, which is exactly the opposite of what traders had thought. Wheat sales and shipments have suggested that maybe USDA was too low with exports. They went the other way, which doesn't make any sense to me. World balance sheets. In corn, what USDA did, there was no South American production changes or anything. They reduced the China import forecast and just took it right off of ending stocks. So that's not seen as being a big or substantial move. In soybeans, you saw some increased crush demand projected for both Argentina and China, I believe, but again, not any big crop estimate changes or anything like that. South American production change is totally unchanged. I'm sorry, estimates totally unchanged versus last month. I thought maybe they do some like tweaking here, given that you're, in the middle of, or past the middle of soybean harvest in Brazil, but they didn't do any of that. A couple of charts that are noteworthy following the report. USDA came down with its world soybean ending stocks number to 121.4 million metric tons. That's still equivalent to 72% of this year's Brazilian crop, or 102% of last year's U.S. crop. So what USDA is saying here with their world soybean ending stocks is that at the end of the marketing year, there's going to be a full U.S. crop worth of soybeans floating around the world, essentially. U.S. corn ending stocks to use ratio still sitting at 10.2% projected, and that's fairly tight. That this is a number that in a vacuum would tell me that corn's too cheap, with spot corn in the 460s and new crop at 450. But the problem with corn is soybeans, and that new crop soybean prices are absolutely terrible. And we're probably going to plant way too many corn acres. And that's why I think corn prices have struggled to some degree, despite this tighter situation. World corn ending stocks to use pretty tight, tightest in 10 years. And I had this chart, I think, on Friday when Matt was on, and we couldn't show it to you because our graphics didn't work. But Mexico corn ending stocks to use ratio is sub 9%. And that number actually came down a little bit yesterday. And this indicates to me that Mexico is not swimming in corn. Mexico needs to buy corn from the United States, and probably will continue to do so. And that is a big positive for the U.S. farmer when you consider that Mexico has been our largest customer.
President Trump toned down his tariff threat against Canada on Tuesday. Earlier in the day, Trump announced plans to double tariffs on Canadian steel and aluminum after Ontario introduced a 25% tax on electricity exports to the U.S. However, following a conversation between Ontario's Premier and U.S. Commerce Secretary Howard Lutnick, Ontario agreed to pause the electricity tax. In response, Trump scaled back his tariff hike, reverting to his initial plan of imposing a 25% tariff on Canadian metals. Lutnick and Ontario's Premier are set to meet in Washington tomorrow to discuss a revised USMCA trade deal. Additionally, on Tuesday, contradicting his statement over the weekend, Trump asserted that he does not expect a recession. Instead, he predicts a strong economic boom for the U.S.
Back and forth, back and forth, back and
Yep.
forth. One story that caught my eye yesterday was this. I believe this is Canada's energy minister, and he said that U.S. ethanol is absolutely on the list of things that could be included or tariffed if Trump moves forward with these 25% tariffs on Canadian goods in April. And that would be a problem. In the United States, last year, I believe we exported 12% of our ethanol production, and of that 12%, Canada accounted for 35%. So Canada is a big ethanol customer, and we don't need to lose them. Especially, I think the last time we ran ethanol stocks, U.S. ethanol stocks are really high, and we can't afford to lose our biggest export customer. That would be bad news.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of our recent premium videos?
This was Thursday last week. This is what I would call hardcore grain marketing information. It's not super fun or super exciting or entertaining, but it's mathematics that you need to be aware of. New crop corn carry opportunities. When should you roll HTAs? How do you capture carry? Should you be pricing versus December, or should you be pricing new crop bushels versus March or May? I went through and discussed those sort of things. Jim was on Friday. We talked about something called the hard reset theory as it relates to Trump and the trade war. Pete was on with you and Ryan on Monday. What did you guys talk about?
Everything from biofuels to tariffs, USDA. Pete's fantastic. He covers it all.
Yeah, Pete's great. And you guys did 48 minutes, which I think is the exact amount of minutes I did the prior time with Pete. That's like the magic number. What did Ryan talk about yesterday? So he did something about China, but I didn't watch it.
Yeah, he just dove deeper into what's going on with agriculture in China and how it impacts the rest of the world, the global market, and specifically, obviously, what it means for U.S. farmers.
Yeah, I think that China obviously is extremely important. We talk about China like every day, but I think there's a lot of misunderstandings. And I think Ryan helped clear some of that up yesterday. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. It's an information only service. We don't want to sell you anything else. We don't want to do your brokerage business. We don't want to sell you crop insurance. We just want to send you our emails. We send you 2 emails per day. The Standard Grain morning update goes out at 5 a.m. Central Time. It includes all of our Headlines, charts, graphics, my cash grain marketing recommendations, the 6 most recent premium videos are included every single business day. You just have to click to play them. There's no login instructions, nothing like that. It's a piece of cake. Give that deal a shot this morning, guys. We do Apple Pay, Google Pay, Cash App, credit card. Takes like 30 seconds to sign up. Check it out. I will forward you a copy of this morning's email if you sign up early.
Soybean production in Rio Grande do Sul is expected to decline significantly. According to local crop agency Amater, the state's crop estimate has been reduced by roughly 30% from the original forecast to 15.1 million metric tons. The projection is roughly 17% less than last year's soybean crop. Prolonged hot and dry conditions throughout the season have weakened the crop outlook. Despite these regional yield reductions, Brazil's national crop agency, CONAB, continues to project a record high national soybean crop of 166 million metric tons.
Yeah, we've heard about the drought and dry conditions in southern Brazil. Over the last 90 days, according to our friends at Crop Profit, they've seen 63% of their normal rainfall in Rio Grande do Sul. So it would make sense that the crop's off a little bit. But it seems like with regard to the broader estimates for Brazil, like nobody's moving a whole lot. USDA didn't move. It seems like the private groups aren't moving a whole lot. So I guess, I mean, the size of the crop remains to be seen. But I think the trade is pretty comfortable with the idea that, yeah, it's a record. It's upper 160s, maybe low 170s, depending on who you ask.
A Russian missile struck the Black Sea port of Odessa on Tuesday. The missile damaged a grain vessel and killed 4 crew members along with a port employee. The port area also sustained extensive infrastructure damage. When the strike occurred, the vessel was loading wheat bound for Algeria. Both Russia and Ukraine have intensified their efforts in the war, while the Trump administration continues to push for peace talks.
They literally bombed a vessel with wheat on it. They
Yep.
bombed a wheat ship. And what did the wheat market do? Nothing. So the market doesn't care about this anymore. If this was 3 years ago, they would have cared. But I guess non-story.
The stock market extended losses on Tuesday, driven by ongoing tariff uncertainty. The S&P 500 declined by 0.8% to 5,572. Earlier in the session, the index had fallen 10% below its record close, entering correction territory. The Dow Jones lost 1.1% and the Nasdaq fell 0.2%. The losses were triggered by President Trump's threat to ratchet up tariffs on Canada, a move that was later rolled back. Tuesday's shifting trade policy decisions are the latest in a series of actions that have unsettled consumer confidence and pressured the markets. Investors are closely watching the release of February CPI report here this morning. Projections indicate a 0.3% monthly increase and a 2.9% annual rise in consumer prices, both slightly lower by 0.1% compared to January's figures.
Stock market corrections are inevitable. They happen. But now we have officially a 10% drawdown from the all-time high that was posted on February 19th. So this in the textbooks would be called a correction. When you see a 20% drawdown from when and if you see a 20% drawdown from the all-time high, that would be defined as a bear market. So we're not in a bear market. This is, for the moment, a run-of-the-mill correction. Remember, there's always a reason for the correction. It's always, whether it's tariffs or inflation or whatever, there's always a reason for the correction. We've got a reason here with the tariffs. To look at the bigger picture S&P chart, I mean, it's still a long-term bull market, but you could go down a lot further while staying in this kind of trend channel that I've got pictured here, which is drawn from the COVID low through the 2022 bear market low. So it could get better, or it could get worse before it gets better. I'll say that. What did cattle do yesterday?
Cattle futures were mixed. Live cattle were 102 lower to 15 cents higher. Feeders were 22 cents lower to 117 higher. Box beef had another impressive day. Choice was up 474, climbing to 322.32, and select was up 254 at 309.49.
U.S. dollars higher this morning. Stocks attempting a recovery. The S&P's up 35. Dow Jones up 180. Bonds up a little bit. Gold's down $2. Crude oil is up 65 cents. And the April WTI at 66.90. I think gas prices are the lowest they've been in a couple of years, is what I read. We'll probably have a story on that later in the week. Everybody have a great day today. We'll be back on Thursday.